To Scott Martin on this, the Kingsview Asset Management CIO. Scott, it's sort of like all dressed up, but no place to go. So there's, hot and very, very excited consumers who want to get their hands on a car, but they can't find them, or at least the ones they want, and they wait and wait and wait. What do you make of this?
They do, and they probably lose interest, Neil. And also, don't even mention the fact that there's repairs out there that need to be done on some of these cars that folks have that they can't get done either. So if you talk to a lot of these automakers, if you talk to a lot of the auto dealers, not only are they having trouble getting materials, they're actually even having trouble getting workers. So if you even get the materials into the dealership, having somebody to fix it there if they're actually coming into work is another story.
This problem doesn't seem transitory, right? I mean, you and I have gotten into this before, this notion that inflation and all these other issues are going to be short-lived. Well, we're past the short-lived transitory stage. Just taking latest report at face value on cars right now, this extends well into next year, maybe beyond. What do you think?
Yeah, I think it does. And I'll tell you what else, Neil. If you just look at the effects that some of the issues have with the global supply chains on all industries. In fact, if you look at how demand starts to wane because folks lose interest, folks find other things that they want to do or buy, you're talking about a major effect on just the overall economy, but also on other areas of the economy than just autos. So if you look at the spread that's likely ahead, if this continues, that has a detrimental effect on future growth.
How do you like the markets now? It's been a bumpy September, typically is, but we can't get past our own way, today's game notwithstanding. What do you think generally has gotten
a lot of bumps ahead?
Nerves?
Yeah, look, I think there's going to be a lot of bumps ahead, and if you're a long-term investor, you have to take those bumps in stride. Use some of those pullbacks and some of the Microsofts, the Amazons, the Adobes, the Nikes to buy in more on your positioning, because if you see any kind of pullbacks, 5–10% in the market, you're a long-term investor, you have to take those opportunities to load up on some of the positions that may be weak in your portfolio, because overall, a lot of those companies, a lot of those stocks I mentioned, I think are going up and to the right in the future.
You mentioned technology. It's been taken on the chin. Say Microsoft today, it's buying back $60 billion worth of its stock. It just raised its dividend 10%. I was flirting with $300 a share before. I don't know where it is now, if we can pop it up, guys. But what do you think of that?
Yeah, I think the buybacks are key. I mean, if you have a lot of these companies, Neil, that are preparing for higher taxes on the corporate tax rate coming forth, you have a lot of cash flow companies that are doing very well in the cash flow analysis, and so therefore they're looking for something to do with all this cash. Buybacks is one thing, dividends are another thing, and that actually intrigues investors to go out and buy shares of the companies that are doing that.
All right, Scott, I want to thank you very much, my friend. Always good catching up with you. Before we go to break here, I want to update you on